Good afternoon, everyone. I am Romeo Bachoco, the Chief Finance Officer of Philex Mining Corporation, and thank you for joining us today for the analyst briefing of Philex Mining Corporation's financial and operational highlights for the second quarter of 2023. Our core net income for first half of the year stood at 702 million compared to 1.3 billion in the first half of 2022. During the second quarter of 2023, Philex recorded operating revenues of 2.051 billion as compared to 2.485 billion in 2022. The decline in revenues is attributed to various factors that we will discuss further in detail. Philex reported a net income of 704 million, showcasing our company's resilience and ability to maintain stability despite the challenges in the market. As a result of lower operating revenues, the company's core net income for the second quarter of 2023 amounted to 314 million compared to 657 million in the second quarter of 2022. While the company's core net EBITDA for the first half of 2023 amounted to 1.188 billion, indicating a decline of 50% when compared to the 2.353 billion achieved in 2022. The market witnessed a significant improvement in gold prices during the second quarter of 2023, while copper prices slightly dipped by 7% compared to the levels that we observed in the second quarter of 2022. Meanwhile, we are thrilled to announce a significant milestone in our Silangan project, the completion of the Silangan East Decline Portal. As we accelerate our tunnel works towards the ore body, we are well on track to capitalize on the opportunities in the mining sector. Tonnage in second quarter of 2023, Philex milled a total of 1.825 million tons, reflecting a 7% increase from 1.706 million tons milled in the first quarter of 2023. This figure is 2% lower than the 1.859 million tons milled in the second quarter of 2022. Looking at the overall performance for the first half of 2023, the company milled a total of 3.531 million tons. While this is a significant accomplishment, it is 4% lower than the 3.681 million tons milled during the same period last year. This decline can be attributed to certain challenges faced during this period. This is primarily related to the unscheduled breakdown of aging equipment at the mill plant. Ore grades for gold and copper for the second quarter of 2023 declined by 14% and 7% respectively when compared to the same period in 2022. Gold output for the second quarter of 2023 was 10,300 ounces, higher by 2% than the 10,062 ounces of the first quarter of 2023, but slightly lower as against the 13,116 ounces in the second quarter of 2022. On the other hand, copper output for second quarter of 2023 stood at 5.642 million pounds, was higher by 2% than the 5.531 million pounds of the first quarter of 2023. But it is slightly lower versus than the 6.461 million pounds in the second quarter of 2022. Total gold output for the first half of 2023 stood at 20,361 ounces, while copper output was at 11,173 million pounds, lower by 19% and 12% respectively when compared to the same period in 2022. Now let's move on to the financial highlights of 2023. We continued to benefit from the favorable metal prices and foreign exchange rates, which have contributed to keeping our operating revenues and core net income at profitable levels. However, our core net income for the second quarter of 2023 was 52% lower compared to the same period in 2022. This decline can be attributed to a lower metal output during this period. The challenges we encountered in second quarter of 2023 had an impact on our overall first half 2023 core net income, which stood at 702 million, This represents about 47% decrease compared to the core net income of 1.33 billion we achieved in the first half of 2022. As we navigated through the challenges, we focused on the implementation of efficiency measures to optimize operations as well as management of cost. Despite lower tonnage milled, operating costs and expenses for the second quarter of 2023 slightly increased to 1.7 billion compared to 1.633 billion in the second quarter of 2022. The increases in the purchase of cost of materials, supplies, and equipment parts, as well as higher power cost, contributed to the rise in the operating costs and expenses during the same period. Looking at the overall performance for the first half of 2023, our total operating costs and expenses amounted to 3.338 billion, which remained relatively stable compared to the 3.318 billion we recorded in the first half of 2022. While we face challenges in the second quarter of 2023, we remain committed to implementing strategic measures to improve operational efficiencies and cost management. We are determined to address the factors that have impacted our core net income during the first half of 2023. In terms of capital expenditures, we invested a total of 994 million in capital expenditures, which played a crucial role in driving our ongoing development and growth initiatives. Our capital expenditures has been carefully allocated to support our strategic goals for sustainable growth. We are confident that these investments will enhance our production capabilities, expand our resource base, and contribute to our long-term success. The breakdown is as follows. We invested a total of 232 million, which accounted for 23% of the total capital expenditures in the development of our Padcal mine. An allocation of 264 million, representing 27% of the total capex, was dedicated to the Padcal mine equipment and projects. We invested a total of 77 million, which comprised 8% of the total capex, into our tailings storage facility. The Silangan project, on the other hand, which is the cornerstone of our growth strategy, received a significant portion allocation of the 367 million, representing 37% of the total capex. This investment reflects our dedication to advancing the development of this promising copper and gold project. Finally, we directed 53 million, constituting 5.5% of the total capex, towards mine exploration activities. These exploration activities play a crucial role in identifying potential mineral resources and future growth opportunities for Philex. For our balance sheet, a total assets stand at 45.438 billion. A substantial portion of our total assets, or approximately 61%, represents the deferred exploration cost associated for our Silangan project. As part of our prudent financial management, we have loans and bonds payable amounting to 7.33 billion, and in light of the ongoing development of the Silangan project, the need to preserve internally generated cash for this endeavor, we continue to reassess our loan repayment programs. This approach allows us to strike a balance between meeting our financial obligations and ensuring sufficient resources for the advancement of our strategic projects. We reiterate that the Silangan project remains at the forefront of our focus. Its successful development is an integral to our maintaining our business continuity and unlocking significant value for our stakeholders. Given the importance of the Silangan project in our growth strategy, preserving our cash reserves through a carefully managed loan repayment programs enables us to maintain flexibility and financial stability. This approach empowers us to seize opportunities, navigate market dynamics, and optimize our operations effectively. Silangan project update. Despite the current challenges faced in our Padcal mine operations, I am pleased to share that Philex Mining Corporation remains steadfast in its commitment to advancing the Silangan project in Surigao del Norte. We have achieved a significant milestone in the Silangan project's development. The construction of the East Decline Portal has been successfully completed. Additionally, the timely arrival of essential tunneling equipment, including low-profile loaders, jumbo drills, and accessories, has enabled us to commence tunneling works as we planned. The ongoing tunneling activities have entered into its second month, and they play a vital role in establishing mine production levels and ventilation openings for the project's successful progression. Preparatory works and permitting for TSF is currently undertaken. We are actively undertaking preparatory works, including essential permitting processes for the tailings storage facility. Our meticulous approach ensures that we adhere to the highest standards of environmental stewardship and compliance in the development of this vital component of the Silangan project. To further align with our project timelines, we have recently issued tender documents for the construction of the process plant. This step brings us closer to establishing a state-of-the-art processing facility that will enhance the efficiency and capacity of the Silangan project. The company is in the final stage of the negotiation and documentation of the syndicated loan facility to complete the funding requirement for the Silangan project. The debt syndication process is spearheaded by BDO Capital and Investment Corporation and targets to raise a minimum of $100 million up to $170 million. This new credit facility completes the full funding requirement for the Silangan project after our successful stock rights offering last year, and in addition to the capital infusion from the company out of its cash reserves. This completes our presentation, and thank you. For questions and clarifications, kindly email to us at philexmining.com.ph. Thank you.